Hello, everyone. Recently, I did a video on duplexes and triplexes, and Dwayne saw that video, commented on the triplex, and I figured, you know what? Let me invite Dwayne to this conversation because I needed to know, well, if a first-time homebuyer is looking at a duplex or triplex, well, what do they need to qualify? How much do they need to make? What do the numbers look like for something for them to consider? Because these are, fantastic properties to look at. So, Dwayne, thank you so much for joining me. Why don't you introduce yourself, tell us a little bit about yourself, and then show us the numbers that you came up with.
Oh, for sure. Thanks for inviting me here. Again, my name is Dwayne Kavanagh. I'm a licensed mortgage agent level two with Mission 35 Mortgages here out of Hamilton. Although I'm in Hamilton, I do have clients I work with all over Ontario, and we do both residential and commercial. But most of what we've been doing a lot lately is working with first-time home buyers. So when I saw your post, I'm like, oh my God, I'm dealing with that right now. I've got a lot of first-time home buyers that have questions. And the biggest question is, how can I afford a house right now? And a lot
Right.
of the times they're coming in, some of these people are very savvy, they've done the research, and they know that, hey, if I house hack, whereas I can find, a legal duplex or maybe a triplex, maybe I can afford this property and buy a little bit more of a property that has a little bit more of investment and use less of my own money to do it. So I loved your post. I'm like, yeah, I'm dealing with that right now. So what I wanted to do is just quickly talk about one particular thing when it comes to qualifying for a property where you have like a legal duplex where you're going to rent out one of the properties. And then I also want to talk about as an investment as well. The biggest thing that people have a hard time understanding or it tends to be a lot of the conversation we have is how do we use rental income to help you qualify for a mortgage? Okay. So there's two real ways to look at it. One is add to income. The other one is offset. And there's a third, which is called debt coverage ratio. We're not going to get into that one today. It's typically a lot used for more commercial deals. But we will talk about add to income because that one's pretty straightforward. So let's say I've got a rental property. That duplex that you showed me, I'm going to rent it out for $2,000 a month. I'm gonna live in the other property, so I can use a percentage of that rental income to add to my income, and that's what add to income means. Pretty straightforward. So in this case here, the majority of the lenders are going to use 50%. So I'm going to use $1,000, add that to my monthly income, and that's going to help me qualify for the mortgage. That makes sense. The
Yeah,
other
and it
one,
makes sense because now you can qualify for slightly more. So that
exactly,
makes great sense, actually.
and in fact, it's helping you with your mortgage payment, right? So if you have a mortgage payment, and we'll talk about that,
Yeah,
that's $3,000, $4,000, and you've got someone paying $2,000 every single month. Well, that's going to help you pay down your mortgage a lot faster too. Because if you wanted to, you could double up, and you could put more towards your principal as well. So there's lots of
right.
strategies around that. The other one I did want to talk about, which is a little bit more complicated. Hardly any lenders use it. I do have one that I use all the time. So when a deal typically won't work at a bank or at most banks or at with any of my lenders, I'll go to this actual bank that I'll go to uses offset still. And so what that basically means is, let's say your gross rent in this case is $1,000, and your property taxes, like your mortgage payment, property tax, utilities, for just all intents and purposes is $1,200 a month. Well, the lender's going to allow you to offset that by using 80% of the rental income. So if your gross rent is $1,000, then you can use $800 towards your monthly expenses and reduce that. So now instead of having $1,200 in expenses, now you have $400. And I'll tell you right now, this helps deals get approved when they're not
Mhm.
approved, when other lenders won't approve them. So not every lender uses it, very little actually. There's one that we use all the time when we need to push a deal through, and that certainly helps. So you have your income, add to income method, and you have your offset method. So let me show you kind of what that looks like in a deal. So here I'm using, you know, uh, a couple making $160,000 a year. If I use $2,400 a month in rental income, and I use the add to income method and only use 50%, you can see up in the top here where GDS is red. Okay, so it's above 40.19, and TDS is 40. Now, I'll quickly talk about what GDS is and what TDS is. So when we're trying to qualify you for a mortgage, we're looking at two things. Of course, we're going to look at your credit score, but we're looking at the suitability. Like, can you actually afford this property? And what GDS means is if we take all the expenses, including your mortgage payment, your heat, your property tax, if there's condo fees, we include that all together, and then we divide that against your gross income. And if you're putting the minimum payment down, which in this case is going to be about 7.5%, well, you have to be at a maximum of 39% GDS. And you can see at this point, you can't qualify for this property.
A little too high, yeah.
Exactly. But if I use the offset method, now you can see here, we used $2,400. All we did here is change the offset. We used 80% of that $2,400 to reduce your expenses. Now all of a sudden your GDS is 29. Deal works. See how that works?
That's a fantastic number to see. Yeah.
Yeah. So, and that's why, working with a mortgage agent that has access to multiple lenders can make a deal work based on whether or not we're using add to income or offset. Okay.
And that's a fantastic point. I also want to let people know, just because your bank that you've been with for 20 years says no, it doesn't mean you can't qualify. You need to speak to other financial institutions, and Dwayne has access to these companies out there that look at other ways of getting you approved. And Dwayne will work with you, look at the whole picture, and then offer you the best possible scenario. So just because your bank of 20 years said no, Dwayne could probably get you a yes. So definitely talk to him. Keep on going, Dwayne.
Now, thanks for doing the plug there. Appreciate that. Let me throw one back at you. You see on the media, a lot of time, a lot of people say, don't work with realtors, don't work with mortgage agents, whatever. It's all negative. But here's the thing. Let's go through a specific scenario where if you didn't work with a realtor and you didn't know what you're doing, you could be in a little bit of big trouble trying to buy a property. Now, one of the things that I've heard you say many times is when you're looking at duplexes, you talk about the meters. I'd love to talk a little bit about that because there was two properties that we're going to talk about that you looked at. We're going to run through the numbers, but why is it so important to have separate meters?
And that's a fantastic point. Just because a unit was listed as a duplex, you need to look into it further in terms of what does that mean? Is it a home with a basement apartment? It depends, right? Because you got to look at one thing is the meters. And that's a great point you brought up, Dwayne, is meters play a big role here. If a duplex exists and it has separate meters, that is a great property to look at, because if you only have a 1 meter on the property, dealing with the hydro and water and all of that, well, what if the tenant that you have decides to do laundry all day? Well, all of a sudden that 50% of your utilities is going to go up because they're using the property for something else. And you're now paying 50-50 for utilities that you may not even be using. But in a duplex or triplex, when it's separately metered, you are just responsible for only the things that you're using in that space of yours.
And here's another one. There's many clients that I've been talking to that I've been searching and looking out over the last year, and they've come to me and said, hey, I've got this property. It's a duplex. I want to buy it. I want to use rental income. And then we go and we have a look at the property. It's pretty easy for me because I'll go in and just look at the pictures. But one of the other reasons why I want to work with a realtor is it a legal duplex? So I've seen them go all the way down the line. You're a couple weeks away from closing, and now you're finding out after doing the home inspection, this is not a legal duplex. In fact, you're finding out more issues with the property. And so having good communication between a mortgage agent and the realtor, we can work together to make sure that we're finding the right property that a lender will actually lend on. You know what I mean?
Correct. And keep you out of trouble, because that's a great point. If you do decide, let's say you gave a deposit and you're looking to buy this place, but it's not a legal duplex. Well, how do you navigate all of that issues? And not only navigate that, but what are just because it says duplex and there's rental income, well, who is the person that it's renting to? What are the laws? What is the zoning? What are any repairs that might be needed that you're not aware of that myself and others have experience about and can tell you and help you navigate that?
Excellent. Yeah. So great advice. Again, it's great why we want to be in good communication, that
Yeah.
you're sharing the listings with our clients that we work together with, and I can go and make sure that this property is something that a lender's going to lend on, right? So speaking of properties, the first one I want to go through is that triplex. So here's the scenario. A lot of people, I work with a lot of investors as well, and the market's been pretty quiet. But now that interest rates are coming down, do you know who's coming out? Investors, real estate investors.
Investors. Yep.
100%. And these are people like yourself. You talk about situations where you've bought your first property and you house hacked, and that's awesome. They're doing the same thing. And so if we look at that property that you posted, this is the one in Toronto. First of all, where can you find a triplex in Toronto for under $1 million?
Yeah, it's you're not finding, and these properties are out there. They exist, but because you're not looking for a triplex, you're not going to come across it.
Exactly. So this is one that I really like. I like this property, and the reason why is because it cash flows. So if we just go through the numbers here, the first slide here we're looking at is basically the overall purchase summary. So what's this going to cost to buy it? Well, I'm going to have to put 20% down, because if it's not owner occupied, I'm not going to live in any of the units. Then I'm going to have to put at minimum of 20% down, and that means 195,000. And typically, most investors, this is what they're doing. So your mortgage here, it's not going to be a hefty mortgage. You're looking at 780,000. If we look at the monthly mortgage payment here, it's basically just under $4,000, 3,883. I'll go through the mortgage stuff in a bit. But what we're seeing based on the rental income on those 3 units and the expenses of like insurance that you would need for the unit, your property tax, this one's cash flow positive by 1,130, which is pretty good in what we're seeing right now. So if we jump over to the actual numbers, so your mortgage is going to be 3,883. We're going to use a fixed rate. So if by the time you lock in on a 5-year fix, with the declining rate environment, 4.39 is probably going to be the rate you're going to look at. We're going to do a 30-year amortization because this one's a rental property, so we want to have the lowest monthly payment possible.
That's right.
And so it's very reasonable. You can get in there for under $4,000 monthly mortgage, and you're cash flowing with over $1,100. So not a bad property, and I don't think that one's going to stay on the market long if it's already gone. Yeah,
definitely not. And I mean, at 3,800, I've seen rent for that amount. So to own a triplex at $3,800 per month, that is an incredible thing to see.
Yeah, and the other option is, well, okay, so here we're using rental income for about $5,600. Well, let's say you wanted to live in one of those properties. Okay, well now we don't have to put 20% down. We can look at putting about 7.5% down. And now your monthly cost is just going to be around $1,200. So your rental, for you to own and buy this triplex after using the rental income, you're basically forking out $1,100 to own a $1 million property in Toronto.
That number blows me away, because where in this world are you paying $1,100 for any kind of property, even rent? I've seen shared accommodations in a condo where you get the main bedroom, but you got to share the kitchen, the bathroom, everything for $1,100. So for $1,100, you are living in a triplex, making every year, every month, somebody's paying down your mortgage. That blows my mind.
I'll tell you right now, I used to work with a guy. I'm not going to name names. I used to work with a guy. We were at a big telecom company, and he had a place in the beaches. Same thing. He did the exact same thing. He lived in it. Then he rented it all 3. He moved up to Collingwood and snowboarded all the time. And you don't want to know what that property sold for. Like,
beaches, forget it.
The guy could almost retire off of selling that one property, and he had a couple. So it makes sense if that's your strategy, is to use real estate as your investment. it's in this declining rate environment, we're going to see a lot more opportunities come up, right? So
Yeah, and that's a great point because I do come across some people who are looking to buy, but they're holding off because interest rates are the way they are and they're waiting. And they may not think about a duplex or a triplex as a possible option for them to either live in one, rent out the other, or just buy it and then rent out the whole unit. And in this case, with this triplex, it is cash flowing. So you can put that monthly money that you're taking in as positive cash flow, put that into a savings account, let it, collect for 2-3 years, have a nice buffer. This gives you the flexibility. If the roof needs to be replaced, a water tank needs to be done, you have the money in there. You don't have to worry about taking out another loan. And another thing that a lot of people don't understand or are not fully aware is, after the 5 years, right, you've now have all of this mortgage has been being paid down. You have your interest being put down and the principal. You now have equity. And here's the beauty of this: after 5 years, you can tap into that equity. Maybe it gives you the opportunity now to buy another duplex or triplex using this triplex to finance the other unit. But that's for a different conversation altogether.
Yeah, yeah, that's how people go from 1 to 5, right?
That's
And
how
I've
they
got
go
lots
from
of
one to
clients that have
five.
over 5 rental properties.
Exactly. And we've used that to do so. And so when people tell me, oh, I'm priced out of the market or I can never own a property, yes, you can. There is options out there, but you need to have an agent that's going to know these kind of things, help you understand what that looks like, and then have someone like Dwayne who can really break down the numbers to you that make sense. And here it is in black and white, very clearly, that you're going to be living in a situation where $1,100 a month that you're paying out, that's insane. That gives you, the ability to not be stressed about work, it gives you the ability to travel, maybe to do the things you've always wanted to do, but because you're paying a mortgage and you have a family perhaps, and everything's going out every month, this gives you breathing room. You're no longer stressed about, will I make my mortgage payment? Now you're like, well, what am I going to do this month? Where am I going this month? I'll go to Cancun for a week. You now have that ability. So instead of paying $4,000 a month, you're only paying $1,100. Imagine what you can do with $3,000 cash every month. It's incredible.
And there's other benefits too. I was speaking with my accountant this morning and I'm like, hey, so if I was owner occupied and I rented out the basement, is there any tax savings that I can get? Now, I'm not an accountant. That's why I asked her. And you obviously want to always work with a certified professional accountant whenever you're doing these numbers. But there are tax advantages, especially when you've got a household where you've got good income. And the income we're talking here is $150,000. There's lots of people out there making a lot more than that. Where you've got combined gross income of $300K. Well, you're paying a lot of taxes to the CRA, right? A lot of income taxes. Where you think about this, when you're renting out your basement or you're buying an investment property, you're basically self-employed. You're going to have rental income coming in. So all of the major expenses that go along with that, if it's a full rental property like this triplex, your interest that you're paying is a tax deduction. Your property tax is a tax deduction. Repairs are a tax deduction. Utility stuff like that. Again, there's a big chunk of rebates that you can put onto your personal income taxes to make sure that you're paying less tax. So check with a professional accountant, but there's other benefits too.
Yeah, and that's huge.
What I would say is, before we lose track of time, let's get over to that other property. And this is the one where we're going to go owner occupied. It's a duplex. This is the one 5 and 7 Guelph Street. They're basically side-by-side duplexes. And again, your home price is $965K, so it's under $1 million. In this case, we can go minimum monthly payment down, which is 7.5%. So we're using $71,500 to buy
as a down payment.
As a down payment.
That's incredible.
And we're going to have a pretty big mortgage. It's going to be $929,240. That's also going to include an insurance premium that's on there. that gets included into the mortgage and then added to the amortization. But in this case here, the total monthly cost, so my monthly cost after the rental income is going to be under $3,000 to buy a duplex. So not bad there. If we look at the mortgage numbers, so your total monthly mortgage is going to be $5,086. That's your total cost, including your principal, your interest. We're using a 4.39 fixed rate. By the time you get into this, after watching this video, more than likely we're going to have a rate reduction tomorrow, and we'll probably have another one in December. So our rates should be coming down pretty drastically. Here we have to use the 25-year fixed. It's not December 15th yet, so we can't use the new mortgage rules. However, still pretty impressive where you're buying $1 million property, but your mortgage is coming out being, under $4,000, which is pretty reasonable by using the rental income there. And again, because you're living in one of the units, there is a calculation, there is a tax deduction to the interest that you're paying on the portion of the home that you're renting out, and the hydro, the utilities, the property tax, that sort of thing for that percentage. Again, speak with your accountant, but there are benefits to that as well.
Yeah, and that's huge. And there's one point that you haven't brought up yet. Now, Dwayne actually has an app that you can go to his website and download this app on your phone. And that way, if you do come across a property that you're looking into, you can quickly enter in the numbers to see, well, what is my monthly payments going to be? Do I qualify for that? Now, it's not a pre-qualification. It's just going to let you know, hey, based on your income and the price of this home, this is what it looks like. So, Dwayne, where can they find this app and where can they find you?
So I'm at kavanaghmortgages.ca. We'll put a link for sure in the notes and stuff like that, but just my last name, kavanaghmortgage.ca. And on there, you'll find lots of helpful tips about buying your homes and investment properties, but also the link to download that app. And you can do a quick pre-qualification on there in less than a minute and 20 seconds.
That's
what
amazing.
it will do, though, is it'll allow you to add in rental income and that sort of thing within the app. However, it's not a pre-approval. And to get a pre-approval, you would just connect with me and we would verify documents and that sort of thing and figure that out before you start shopping around, which is always the best practice.
Now, one last question, Dwayne. How much does it cost to get this information from you? If I called you, what is it going to cost me?
$0.
There we go. That's right. I like $0.
No, I don't. And first of all, I don't sign any of my clients to a contract. If you don't love my service, if you don't love my rates, you can always leave and you can go back to your bank or wherever. Typically, they don't leave. But yeah, I'm not going to sign you to a contract. And we don't charge. A lot of people think brokers charge fees, agents charge fees. It's only when we're doing private or B deals. If it's a regular A deal, if you're insured where you're going to put less than 10%, that's going to be an A deal anyways, and there are no fees for that. We would always be upfront with it, and you would know right away.
Well, we're running out of time. Thank you so much, Dwayne, for this incredible information. I'm here as an agent that I can show you properties like that, but it's someone like Dwayne that can actually make this a realization to help you with these numbers, to calculate these things, and then point out things that you may not have known. And now all of a sudden, when your bank said you're only qualified for this amount, Dwayne can look at this and say, well, you can qualify for higher depending on the situation, but reach out to him, get this information. It's free to talk to him. So why wouldn't you talk to him? At least get the info. At least talk to someone like Dwayne who can give you the numbers before you do anything, before you sign anything, to understand, do I qualify? Am I priced out of the market? And when can I buy? So thank you so much, Dwayne, for joining me. We're definitely going to do this again because there's a lot of properties going up for sale and I want to talk to you further. So thank you, everyone. Have a great day.
Thanks, Robert. Bye for now.